We talked about last week, we said this week and next week is the 2 weeks of the year where you have the most kind of pressure on stocks because of mutual fund distributions. So here's what you need to know before the bell this morning. On Monday and Tuesday, the market sold off, came down towards that 20-day moving average. Again, this is part of that portfolio rebalancing that we've seen. And if you kind of look at the rotation in the markets, a lot of the underperforming stocks that were underperforming over the last couple of months and those that were underweight in portfolios, i.e. like the mega cap 7 stocks, have had big rallies here over the last few days, even though the rest of the market was selling off. Yesterday, the market bounced a bit. That's not surprising. Again, you're getting a lot of shifts within the markets right now because managers are having to sell some stocks, buy other stocks to rebalance portfolios. We've got about another 3 or 4 days of this. So again, we may get some more sloppy trading this morning. Futures are down a little bit this morning. We're having a little bit of a weak open. But again, I think you're going to continue to see a little bit of sloppy trade here over the next, today, tomorrow, Monday, Tuesday of next week. And then starting around Wednesday when the Fed announces their rate cut, that's the setup for the beginning of really the Santa Claus rally. They'll announce their rate cut, but that's also kind of the 2 weeks of the year where you begin to get that push into the year. That's the window dressing. I've got to have these particular stocks on my portfolio, etc. The rally between basically where we are now to the end of the year is about 1% on average, about 1.4%. So it's not huge, but you do typically get a little bit of lift here to the upside heading into year end. So again, that's just kind of what you should kind of be expecting here. And again, it certainly seems to be setting up that way. Markets are very optimistic. This has been a very big year for the markets, which means there's a lot of managers behind the curve right now. And again, if they're underperforming the index, that's a really tough conversation to have with your boss. So they're going to have to play catch up here into year end. That's going to provide a bit of momentum push. Now, does that mean it has to happen? No, that's just normally how it's set up. That's kind of the average of history. Doesn't mean we have to rally into year end. There's certainly been rare cases where we haven't, but normally, more often than not, you typically get a rally into year end. So again, this is, kind of, now, I wouldn't go out and just go whole hog into the markets because markets are still overbought here. We are kind of flirting with a sell signal at the moment. So there is some moderate risk here. But just the bias is to the upside. So this is really not a time to be overly cautious at the moment. Once we get into about mid-January, right around inauguration, markets are going to tend to perform early January. And around inauguration and presidential election years, like we'll have, or the first year of a presidential term, you tend to get some weakness in February, March, and April. So again, that's really hard to predict out that far. A lot of things can happen between now and then. That's just kind of seasonal tendencies of where the markets are. And with the markets kind of this overbought in the stretch, and particularly in the longer term, if we start looking at weekly and monthly charts, markets are very extended and very overbought. So, this is why we think next year could be a bit more challenging year. Again, do not bank on next year being another 30% return year. A return year more between 8 and 12%, if it's bullish, is probably a lot more likely. And next year could very well be one of those years where we have a strong start, a pretty decent correction heading into summer, 15, 20% even, and then a rally into year end and actually wind up making some money, but it could be a bit volatile. So again, just kind of prepare yourself for next year. I don't think it's going to be nearly as easy in terms of managing money as it was this year and really last year. These last 2 years have been a cakewalk managing money. I don't think that's going to be the case this year. Could be wrong, but just things are getting pretty optimistic here. So that's what you need to know before the bell this morning.